Well, hey, good afternoon, everybody. Welcome aboard. This is Doc Severson with Ready Set Crypto, and I've got Mav over there coming in from the left coast.
Hey
Hello,
guys.
everybody. How's it going? I'd love to see where people are coming in from today. Like I said, Mav is coming in from Los Angeles. I'm coming from Greenville, South Carolina. It's another beautiful day down here. It's 55, 60 degrees and a sunny day. What winter? I left that behind in Ohio. So, where are you guys coming in from today? We got a number of things to talk about with you. We'll be on for maybe, say 45 minutes or so. We've got a number of things to talk about. We'll talk about live markets. We will talk about the topic of the day. I don't know what Mav's going to talk about. It's kind of a secret. So, hang in there and we'll get to that in just a minute. We have Tony coming in from Italia. We have Las Vegas. We have Dallas, Texas. We have London, UK. Phoenix, Arizona, the Netherlands. And we have, let's see. Uh, Milos wants to go over Zilica. Okay. Let's see. I can't even pronounce it. Ibiza.
Where is no, that's Ibiza. Come on.
Ibiza.
Yeah, I don't know where Zilica is in the world.
Yeah, it's down there somewhere. We got Denmark, we got Montana, Amsterdam, Serbia, and we got Norway. Outstanding. So what we'll do today is here's kind of the schedule of events for today. Is that I'll quickly go over the markets, and I will probably leave out one of the coins that you want to look at, but I just want to like talk around the top 10, and right now there's quite honestly not a whole lot moving. And then what I want to do is we haven't talked about these guys for a long time, but guess what? Digitex is out with their testnet interface. And so I actually have been granted access to that. So I got lucky, one of the lucky ones. So it's a lot of fun. So I want to show that to you, show you what you can do with Digitex interface. And then I will throw it back to Mav. And he's got a couple of topics that he wants to talk to you guys about. Again, they're in secret. Don't know what they are. Newcastle, England. Newcastle. So what have I had? I've had Newcastle Brown Ale. Have you ever had Newcastle Brown? No?
It's like asking, like, have you ever had Stella Artois?
Well, like everybody has, right? Yeah.
Yeah, right.
If you drink Stella, do you have to have that little thing where you just like wipe the foam off the top? It's like every time in the commercial they're doing that. It's like, come on. You flick it off, you drink it.
Oh
There's none
man.
of that schwanky stuff. All right, so let me. I'm gonna eliminate you, Mav, and we're gonna jump over here to. I don't want to go to Digitex just yet. We're gonna go over to the live markets. We'll go to the live markets. So right now, everybody's looking at this $8,000 level on Bitcoin versus the U.S. dollar, and it's just hanging by a thread right now. But what I've got on the right-hand side here, this is the volume profile. Volume profile shows this is a high volume node that's there. We've had a lot of trading around the $8,000 level on BTC, so it's hanging by a thread right now. But here's what I say about price action is if you want it to go higher, you got to go lower first. So this was a good tell that we had down here is that the price it broke down from this bear flag, a little bit of a head and shoulders pattern as well too, broke down from there, hit the measured move, and then we had, I forget exactly what data point we had come in. I don't remember that. Oh, that was the China bump. We had the China bump right there, and then that's where we got this big short covering move. Completely cleared out all the shorts, and it's been just sort of drip to the downside since that point. So it's still we still have a primary uptrend in place. However, that's really up for grabs pretty soon here if we start to print a lower low. So what we may have to do is we may have to go plumbing down here to 6,500. It's not what I want to see, but it may be just the best thing for us right now is to get that capitulation. We should see if we do something like that, want to see a great big volume spike down here. And what I would want to see for a reversal signal is a candle that looks something like that. So that's a hammer candlestick. Very small, real body, great big lower wick on here, and big range, big volume. That's a one-day reversal signal. Now, it needs to be confirmed, but this is an awfully good indication that demand is overwhelming supply in a case like that. So that's what we're going to look for. So we may have to go down to 6,500 again. The reason why 6,500 is a high volume node is all that activity that we had back here. I don't think we need to go down to 3,000 again to prove the case for this. I think that enough supply exists for this. And so one other thing that somebody brought up last week is to say, hey, don't forget, if we look at this on a monthly basis, and if we look at this on the log scale, that, let's see. Unfortunately, I have to go with Bitstamp on this one, but this is very similar to what we went through back here in 2013 to 2015, is that we had the same kind of move here. And so we may have to just, go through one more plunge again to really sort out the wheat from the chaff before this thing is ready to go. Now, as far as, so that's it for the log chart. That's it for the monthly chart. Not much else is really worth going over here, with the exception of we have some smoke and movement here from Digitex. So Digitex, as you guys know, is something that's been on and off again for the last year and a half. We brought it to everybody's attention around the latter part of August in 2018. That was a long time ago. I mean, we're talking about a year and a half now. That it looks like they've lined up with a really competent partner to be able to build their vision that Adam has. So this thing is, it's got some real potential. So let me show this to you, and hopefully the interface is able to run. This thing is a little bit of a CPU hog right now in Chrome, as well as the fact that I'm a tab monster. I probably have way too many tabs open right now. But what you're seeing here is, let me explain the interface to you guys really quickly and what matters. This is what's called the ladder interface, and this is really the most important part of it. So that's the ladder interface. We also have, and I'll show you how to use that in a minute here. We have time and sales. So these are just time and sales that are flying up here. And then of course we have your basic trading view chart. Now we got some interesting things happening here. So you'll notice right now in the testnet, you'll see these spikes. And one of the reasons why we're getting these spikes, so look at this, we're going from like 8,200 all the way down to 7,100. It's because people are playing around. People are getting the testnet interface and saying, I want to trade 1 million contracts. And they'll go short 1 million contracts and completely wipe out all the liquidity down here for about 5 milliseconds before running it back up again. Guess what? That's what happens if you talk about manipulated markets. This is what can happen in any live spot interface right now. So like if you're trading something that's fairly illiquid, you can see these types of movements. And this is why I tell people within our Omnia section, our Omnia subscribers, please do not use market-based stops when you trade these things, because you will get cleaned out on those. And that's the reason for that. But it's unlikely to happen with something that's got good liquidity on it. It should be absorbed by the supply and the demand. But you can see right now, there's not a whole lot of people that are on testnet. So this is the interface right now. And so this is what's missing from every other futures-based interface that's out there in crypto, is a proper trading ladder. So what I can do is, if I want to, right now is pretty flat, but if I want to just go in here and say, hey, let's go ahead and add 100 contracts long, and let's go ahead and shut those out of here. So I'm long at 80.90, and I can actually just move this up here. And so what I can do is I can actually act as a market maker. And this is the whole point, is that you're a liquidity provider, a market maker. You can basically buy at 80.90 and sell at 80.95, and you can do it over and over and over and over and over again in the 24-hour period without incurring any commissions. And so all we're looking for is just a little bit of movement. So you can do this the opposite way too. Generally, what we want to do is we want to trade in the direction of the major trend. So what I don't have up here is a set of fractal charts that I normally run with. So trading in the direction of the anchor chart swing, looking for quick pullbacks against there, and setting up high probability trades that we can use for these type of trade entries, right? So this is a very responsive interface. If you've never used a ladder before, what I'm hoping that they're going to do, in fact, this is one of the questions I had for Adam, is if I go long here, then what I should be able to do is set up a bracket order that if I wanted to go for a longer trade, basically I would set it for a limit sell up here and then a sell stop down here. So this is what we'll be able to get with a true one cancels other bracket, which is the way that we trade with the E-mini futures in the larger exchanges, such as the NASDAQ, things like that. So bracket orders are coming down the road. But for right now, all you're doing is you're buying on the bids on the left-hand side. So where it's green, this is where you're putting long entries. And then you're selling on the right-hand side, which is where your offer side is. So you can either go buy to open, sell to close. Now look at that. I've started to close down some of my position. Look at this. So I started out with 100 contracts and I've got 64 left. And, you know, eventually what's going to happen is that overhead. So I'm first in line right now. So the next contracts that get chewed up at 80.95 are going to be me. And this is the way that you play this. So long, you buy to open, sell to close, or you can sell to open, buy to close if you want a bearish position. So again, this is, sorry about the flashing here. I think got a little memory issue, but this is what the Digitex interface looks like, and this is what every other major professional futures trading interface looks like, and this is the way it should be done. And crypto has got a ways to go, but really Digitex is the first pioneer for this, as well as being a commission-free futures exchange. So with that, I'm going to throw it back here to the both of us. That's what Digitex looks like. I'm optimistic that they can get it to work this time. They're looking to first quarter of 2020 for the mainnet. And guess what, guys? I just got filled on the rest of this contract. So there we go. I am out. I'm out. And that's the way you trade with this. That is market making. So if you ever wanted to be one of those evil market makers, now you get your chance. You can trade through a ladder like that.
Cool.
Okay, so what you got there, Mav? And I'll sit back and look at some questions coming in.
Yeah, have a Newcastle.
Newcastle Brown. Newcastle Brown.
It's like it's that Monty Python joke. It's like having sex on a beach. It's fucking close to water. All right, just keeping it light for you guys. All right, let's make sure PowerPoint doesn't crash on me. There we go. Cool. So yeah, what's the market's next move? What's going on? Obviously, we've had at the beginning of the month we had a nice sort of bump, but since then it's sort of tapered off. And I think going into 2020, people are asking what's going on, how do I play this, what's driving the market right now, all of that. So we're going to jump into that right now. First thing though is I want to say we are doing a Black Friday sale. This is the one time of year where we discount our courses. Everything is 20% off, just like what Doc is wearing right now. So, and yeah, you can get any of our courses over at ReadySetCrypto.com/courses, be that trading, portfolio management, security. We try to cover the gamut in terms of everything fundamental and, you know, what you need to know about the crypto space and how to trade it. So again, this is the one time a year that we do this. The other way you can get all of our courses at once is to join our Omnia service, sort of a Netflix style, with, you know, the additional benefit of having our newsletter and our private Discord, things of that sort. So anyways, moving on. So what's going on? Talking about a little bit what we covered last week. I wanted to bring back this slide just because I think this is a nice primer. we're really seeing this emerging narrative between open finance, be that cryptocurrency, government run or controlled currency, and private consortia or corpo currency, as I like to call them. This is where we see, Bitcoin is open finance, government run is the, potential Chinese coin, the potential European digital currency, and now the potential US coin that the US Fed is considering. And private consortia are, that's Libra, but it's also big tech getting into finance. So we'll talk about that. Um, Fintech is really the new buzzword, the new I would say battleground of this ongoing U.S. China trade war, and really is where we're going to see a lot of shots fired in terms of development and trying to one up each other. I think this is one of the largest I don't know expansionary phases we've ever seen in really human history, where over the next 20 years we're going to see both technology, but as well as the economy just go through a complete paradigm shift. Um, that doesn't happen very often. So, and certainly not to the scale that I think we're about to embark on. So, a lot of these macro forces driving this, a lot of what is going into. Yeah, there's a lot that's about to change. So it's really exciting. At the same time, and I'm gonna have to say that I'm right here, guys. China has come out and said, "Oh, we were just kidding about Bitcoin. We want to make sure that we're only talking about blockchain here. Because crypto, that's Ponzi scheme and scam territory." And so Xi Jinping came out and basically said that. Um, this should not be a surprise. It affected the market a little bit, so I'm glad that the market's not oh, this is so terrible. What's going on? But we did see some Chinese project coins like VeChain completely sell off in response because, yeah, it should have been pretty obvious to people that while it's cool to see the Chinese government has interest in blockchain as this potential new direction or this new focus for them in addition to things like 5G and AI. And again, this is how they're trying to develop leverage over the US, who clearly wants to take more of a backseat approach to fintech development. They want to be heavy handed, right on top of things, funding initiatives, giving out grants, things of that sort. So for them, it's all about developing their own blockchain solutions, the same way that they, the great Chinese firewall with the internet, things like that. So this is how China does what they do. This should not be a surprise. And furthermore, I think, as I've argued, this is not what we want either in terms of blockchain proliferation. It's great to see that a major sovereign country is utilizing blockchain to this degree, but at the same time, their version or vision of what blockchain is and what it represents and what it can do is very it's very antithetical to the sort of open principles that we usually run by. So anyways, that's sort of what I was just talking about in terms of the emerging trifecta of potential currency, the currency wars. This is control currency right here, made manifest. We're also seeing some of the private consortia start to make progress as well, with Google coming out and saying that they're going to do a checking account. Uh, this should also not be a surprise, and this is something I've been saying for pretty much since we uh, learned about Libra, is that big tech has realized that they can become the next powerhouse industry in the states and the world if they can combine their expertise and technology with financial data and understanding and analytics, and they're able to move a lot faster than what Wall Street and much of big finance is sort of hampered by. This is another huge battleground that I think is sort of being underplayed right now. Sort of the competition between Wall Street and Silicon Valley in terms of who controls the future of really fintech, but also that consumer private data. Um, I argue that whoever owns that data basically owns and builds the future. So that should be very interesting to see it play out. But this should again, like this is hilarious to me because everybody was ganging up on Facebook and Zuckerberg and the Zuckbuck, Libra, and meanwhile they're all working. Apple's got its Apple Card, Google's going to have a checking account. I'm sure Amazon is going to have some sort of way to Alexa manage my retirement accounts, kind of thing. Yeah, I hope that just set up a bunch of people's echo devices. Um, we're definitely going to see this narrative continue to evolve. This is all cool, or this is interesting stuff. But what I really want to talk about today is some of the more macro trends of things, because I think that's what we need to pay attention to more than what's going on, what Google's doing and what China's doing. Um, Particularly, I want to talk about a little bit of the interest rate narrative that we were going on last week about how the U.S. has cut interest rates 3 times this year. I think they just dropped it by 35 basis points, and how we are looking to the world is trending towards negative interest rates. I don't think the U.S. is at this point, but certainly that is becoming more and more of sort of this catharsis that is really developing related to Bitcoin becoming a global hedge. So I want to talk about that. I think another thing is as we've seen this year play out, and as we've seen interest rates be cut, um, people have been looking to Bitcoin, saying like, well, "What's going on? Why is it not performing? Why is it not developing this safe haven hedge, digital gold that we all thought was going to be the case back in June?" So I think negative worries aside about both the macro economy, the stock market and Bitcoin, I am bullish on the stock market, particularly the S&P 500, to over the next 6 months continue to return all-time highs, and at what that spells an even better narrative for Bitcoin, and I'll explain why. I think there's two principal reasons why the stock market is continuing to do very well, despite alarmist fears otherwise. This continual recession, for the past 10 years of this bull market, it's always been like, all right, well, this is nice, but when is it going to turn around? When are we going to revert? When are we going to say, okay, enough is enough? Let's go back to, let's address the underlying reasons and issues that led to 2008. No, it would continue to kind of double down and double down on, no, we're going to continue piling on debt. We're going to continue to expand the deficit, and we're going to continue to see consumer debt reach all-time highs and things of that sort. Um, what I think should be very clear to people, clear to you, is that while yes, it's very obvious that we should be considering a recession or a pullback or a slowdown. I mean, global economic growth is slowing down, and yet the U.S. continues to print all-time highs in the stock market. So what's going on? Why is there that sort of dichotomy? I think one of the biggest things to look at is the stock market is really the aggregate of emotions, right? It's what people feel about things almost as much as the analytics that go in behind it. Um, Doc likes to often talk about in his fractal energy trading how the larger trends dominate. You've got the larger trends, which are the dog walker, and the smaller trends, which are the dog. I would say that sort of metaphor also sort of applies when you look at the stock market versus the economy. The economy is the dog walker, kind of just, they are setting the direction of things, and they are the ones that are, where they go, that's where the stock market's going to go. It's going to go all over the place. But principally, it's going to follow what the economy is dictating. So, anyways, to that end, I think there's too much negative energy sort of built up, or there's too much expectation of negative reversal right now. And so, I got this little graphic here that sort of spelled that out. There's a lot of people waiting for the market to reverse because they want to act upon that opportunity. Doc and I know some bear traders that have been, you know, like on the
Short for the
wrong.
last 10 years.
Right, right. Like, for, consistently wrong because they've been saying over and over and over, no, guys, we gotta be in all cash right now. We gotta be, we gotta have that dry powder reserve ready to fire once the market starts to go down, and we're gonna dollar cost average, and we're gonna buy the dip, and we're gonna be the kings of tomorrow. And that just hasn't happened because there's so much of that. There's so much of there's just a lot of people on that side. I think 2007, if you were paying attention, you probably could have seen if you watch movies like the Big Short, if you look for the right signals of things, you could have been on the right side of things when Lehman Brothers went over and Bear Stearns and TARP was signed. Yeah, you could have shorted the market at the right time. But I think what there's a general malaise right now of like, I don't understand why the market continues to go up when I feel like it should go down. And, that seems to be the general rhetoric of things. And yeah, I think it's not as clear, uh, at least in the short term, that we're going to just see this like one day the market just nukes itself. It's all going to go bottom up. We just haven't seen the signs of that. In fact, there's a lot of there are some indicators of like the yield curve inversion and things like that. Those are red flags, obviously, but there's also a lot of positive flags. So we're in this sort of like middle ground, this no man's land of well, the market continues to go up, so even if I feel bearish, I'd be stupid to not look at the bullish trend things. And so, anyways, that's point number one. Second point is that unfortunately, rate cuts are bullish, and what we will continue to see is the economy, the central bank. They've really become more and more attached to preserving the norm, and uh, it, we'll see where this all plays out. But I think right now there's this general rhetoric of things that we have to maintain the status quo. We have to maintain, um, you know, as much as Jerome Powell wants to be dovish, it's just I don't know. It seems to be what has been pushing things, and so those 2 points aside, I know that was a little bit pedantic, but I think that's what helps me to deliver the narrative that Bitcoin will continue to beat the S&P, but also this is a slide from last week. Just some a poll of some of the major financial institutions and how they feel about Bitcoin and what's preventing them from getting in, and so on and so forth. Main takeaway from this is just that it's in a good position. They feel like it's an emerging asset class. It needs regulation. It needs onboarding, things of that sort. But it's well positioned. Um, but again, how does this all relate to Bitcoin? What is the S&P and the market continuing to be bullish with bearish sentiment? Kind of in the back seat of things. How does that relate to Bitcoin? How does that help Bitcoin have a dominant 2020 essentially? I think the contrarian thesis here is that it's not as much right now a hedge on equity market turmoil. Instead, there's a lot of reasons why we can, as we just talked about, can see the S&P, the Dow continue to print higher highs. Uh, I think what we want to pay attention to is how that sets up Bitcoin going forward. So again, why? The emerging narrative is that Bitcoin can and will respond to specific crises. We've seen that a couple times in Bitcoin's past, where in response to some countries having currency issues, we've seen Venezuela, Cyprus, things of that sort. Bitcoin's role as a global currency continues to develop itself. Um, and yeah, it's clear to us that Bitcoin works as a crisis hedge. But I think the better and what's going to define Bitcoin over the next 10 years is that it's a macro hedge. This is sort of what people were referring to when they say like safe haven asset and digital gold, because gold works very well as both a crisis hedge and a macro hedge. Um, I think what we want to pay attention to is, as Bitcoin becomes more and more of this macro hedge, as cryptocurrency, the industry, continues to be more and more of an alternative asset class, this is what's really going to define, especially over the next 4 years. I would say, post halving event. This is what's going to drive Bitcoin just about as much as anything else. Bitcoin ETF backed, notwithstanding, institutionalization is great. It helps legitimize Bitcoin and the crypto space. But what I argue that does that even more so is helping Bitcoin to essentially act against and be contrarian to what is the global macro trends of things. So right now, debt is the new money. Like centralized control has been trending very well. Democracy has sort of been eroded in a lot of countries. We were seeing lots of protests and general you know frustration with the systems and the economies of the world. People feel that wage inequality it is at all-time highs. Certainly in the US, the highest it's been since the 1920s. There is a lot of frustration with the current system, and people are asking and demanding for more representation, better equality. And this is going back to the start of my death by PowerPoint here. This is why over the next 20 years, we are not only going to see a major renaissance when it relates to technology, because we have a lot of emerging technology innovation platforms right now. This is what I've referred to as the holy grail of technology. AI, IoT, blockchain, 5G, all this cool stuff coming together. What does that look like? The synthesis of that. Not only is a technological renaissance going on, but again, the economic renaissance of things, a complete change in thinking and how things are done, basically rebooting capitalism and making it better. I hope that's not a controversial statement to say. Like we can always look for more efficient ways to do things, ways that better uplift the bottom 20% of society, things like that. And I think blockchain is at the heart of that thesis and argument. So last slide here. I think where we're going right now is, unfortunately, Bitcoin is still untested as a macro hedge. It's well positioned. It's got all the right forces behind it to help drive that narrative. But ultimately, we need to see it prove itself, and that's been the other major rhetoric piece this year, is that, well, Bitcoin seems to be very it's not living up to expectations. It's not developing that safe haven narrative. Guys like Peter Thiel are like, oh well, this is where gold is just proving itself even more so, and things of that sort. That's or sorry, Peter Schiff, not Peter Thiel. um,
You talking about
no,
Adam Schiff or Peter Thiel or who?
I don't know. It's all mixed up. The gold guy, yeah, the gold guys are basically saying, yeah, this good job, Bitcoin, but you're inherently still a Ponzi scheme, and we'll continue to call you as such. Um, we're going to continue doubling down on gold, and have fun with your untested, you know, Satoshi money, whatever. No, I think what changes over the next 10 years, what is the central reason for holding and continuing to see Bitcoin be adopted, adapted, is that it becomes this macro hedge, that it is well positioned, to respond to a lot of the macro forces that are evolving right now. This is, I think, more so. This is more important, and will be more driving of adoption, or just recognition, than even the technology itself. People want to say like, oh, you either look at the price or the technology, and most people seem to look at the price. But I think there's a third category in terms of how it relates to the overall trend of things, and sort of like the synthesis of technology and price. So, anyways, I hope that was a little insightful and didn't talk your ear off there. But yeah, I think we are in an interesting time with an interesting asset class that is about to do some interesting things. So hang in there, guys.
Okay, so what do we
Cool.
got here? This is the audience participation portion of the program. How we I've been trying to answer questions as they come through out there.
Yeah, we'll stick around to the top of the hour. Just let's see what you guys got for me. How low can you go? What's your buying point? I think right now I'm seeing 7,800 as potential, but I, I think it can go lower. Um, very much so.
It'll well, I think well, first of all, there's a lot of assumption out there that 8,000 is going to break, and I mean it doesn't have to, but right now the way the price is moving right now, it's just very kind of mild. It's just like little dip buyers are coming in at 8,000, little dip buyers, and when that gets exhausted, all of a sudden you're going to see sort of a kind of an air pocket go down there, and that's we need to see if you look at it's chart time again. Here we go. If let me go over to a different list here. But if you see like if we're going to look at Bitcoin and volume, the emotions are marked with volume. This is what we need. We need emotions. So emotion is basically fear. So the volume is kind of like a fear indicator because fear shows whether the price is either fear of missing out or fear of loss. And either of those two. So a lot of people say that markets move on fear and greed, and I disagree. I think it's fear only. So greed is more of complacency, and markets don't really move on complacency. It's all fear. It's fear of missing out to the upside. It's fear of loss to the downside. And that's where we get pivot points from is when the fear kicks in and people are just scared shitless, right? That's where either you're scared of missing out on the move or you're scared of losing it all of what you got.
So, got a question about Decred. So first off, I think, well, we put out our portfolio version 4.0 today, and part of that was asking the question, with a 30-year investment horizon. So, what is the top 10 in 2050, hypothetically, and sort of what defines, I guess, the staying power of coins to last the next 30 years when this is an asset class we've been only been in existence for about 10, and most of these crypto projects have only been around for half of that, if at best. So yeah, when it comes to Decred, or really what I would say is important, and what's going to help projects to stick around is if first they are a hedge against Bitcoin. So this is things like Litecoin, or some of the other Bitcoin derivatives, forks. Inherently, they have staying power, even if they are inferior, superior, whatever, in terms of technology, in terms of their block times, in terms of their community size, cheerleaders, whatever. I don't really care. Um, they have staying power because they act as a hedge against Bitcoin, and just in the same way we've just been talking about, having that sort of hedge power gives you, it even if it seems kind of stupid, oh, you're just contrarian for being contrarian's sake. I think it's important because, like, just as Bitcoin is a hedge on gold, all those projects are a hedge on Bitcoin. Same reason. There will always be contrarian energy. There will always be this need to hedge against what is, growing larger, or just what could potentially reverse or whatever. It's just that's part of human nature and investment strategy. So that relates to cryptocurrencies, like strictly cryptocurrencies, ones that are about transactions. When it comes to more platform type projects, so this is Ethereum, and Stellar, EOS, Neo, etc. Very different conversation. In that case, it's more about you don't have the same sort of hedge potential. A little bit of that. That's why like Ethereum Classic is a hedge against Ethereum. That sort of argument. But when it comes to smart contract and DApp platforms, it really is Metcalfe's law, network effect power, and they're not so much as hedge against each other as competitors. They are competitors, and the best project will win. So that's why in that case, a lot of these major platforms will not survive to 2050, or they'll just be relegated to the side or whatever. In that case, they don't have staying power to stay into the top 10. So why that I bring that all that up, why that's a prompt for answering the question about Decred. Decred, I think, is a nice synthesis between the ideals and principles of what Bitcoin has and some of the new age Web 3.0 thinking that goes into Ethereum. Those being the two principal sort of approaches that I just talked about. So that's just sort of a philosophical side of things. There's a lot more in terms of depth that we could get into. Uh, Checkmate, who's a part of our team, is, in my opinion, one of the best data scientists, blockchain data scientists in the world, and he covers Decred very frequently because he's very excited about the project and he writes about it frequently. So check him out on Twitter if you want to learn a little bit more. But I echo a lot of his sentiment about what is the driving force behind Decred and what makes it interesting. So, anyways, all right. We'll keep going.
So Darth Mark is asking about the next class that we're going to release for the Omnia. And that's coming up in a few weeks, and it's going to be tentatively titled The Trader's Edge. So what I found is like there's really two sides to trading, right? There's the black and white technical side of trading, like buy low, sell high, and what you're supposed to do. So whether you're a fundamental trader, whether you're a technical trader, right? So that's the objective side of things. And then there's this whole subjective side of things because we're human beings, we're flawed individuals, and we absolutely do a horrible job of managing live capital risk because of fear. So, how do you get around that? How do you create a professional environment? How do you shortcut your, and everybody has got to go through this unless you're a robot, unless you've got a robotic personality. Uh, if you absolutely have no subjective feelings whatsoever, that probably would be a good thing in this business. But most people don't. Most people want to make decisions that feel good. And so, how do you do that and be successful in this business? I've got a few thoughts about that. That's what's taking me the last 20 years to figure out. So, I'm going to share that with people. That's coming up in a few weeks here. I would say probably the middle of next month, middle of December, I'll probably be releasing that course.
Invisible Friend, I put out a video maybe like a month ago about Decred. So go check that out. And we have a ton of stuff through our Omnia service about Decred. Let's see, alts in general for 2020. I could use the same argument I just made about that hedge energy. Altcoins in general will continue to be a smaller asset class or subset, sorry, of crypto in general. And so, yeah, I think people can pretty obviously see that like what is small can be bigger, and altcoins inherently have more return potential than something like a Bitcoin. To, for example, double your money. Uh, that being said, you have to be very careful about that. And I would say small positions, because if you were to take an index of let's see, like the top 20 this year, I think you'd be somewhere between 50 and 70% had you bought on January 1st. If you were strictly just in Bitcoin, I think you'd be up something like 100% or something like that. If you were in exchange coins, you'd be up 200%. But I argue that's not going to last forever. that being said, exchange representation in terms of employment in the blockchain industry is something like 40%. So it's pretty substantial. But once we see more institutionalization, uh, quite frankly, Binance just can't compete with Wall Street. It just doesn't have the legacy that Wall Street does or the reach. But that's still interesting. Um, as it relates to altcoins, there are few and far between at this point that I would say are substantial, legitimate, worth even considering. Why Doc hasn't looked at something like Cosmos, if someone was asking about. Cosmos is sort of interesting, but it's only been around charting on CoinMarketCap, so far as I know, since April. So it's still kind of new on things. But yeah, we're it's interesting, but like, yeah, the larger point was that that index point was that you probably be down on your money right now, or barely up if you had just been strictly out of the top 20 or out of a well performing subset of this asset class like exchanges. If you were just buying altcoins willy nilly, you'd probably not be doing so hot right now, or not as well as you could be. So when that energy changes, that's when we'll consider altcoins more heavily and more favorably. But right now, it's a top 20 market. So hope that makes sense. Chainlink. Oh, Chainlink is interesting. Chainlink is interesting. I know I'll get a lot of flack if I come out against it. I'm not against it. I'm not really that much in favor of it because inherently it depends on Ethereum and continued development and the need for like I still don't understand why Ethereum can't just bring the Oracle problem in house. And I don't know. That all said, I do like how Link has grown up. I think I was the first YouTuber to talk about Chainlink back in 2017. I've met Sergey, so don't call me a Chainlink hater. Certainly not. But like I I'm I'm interested in it, but like it's not the one for me, if that makes sense. It's a cool project, but inherently it has a very strict focus. So what is the upside potential if it gets adopted and things of that sort? And inherently, what is the token metrics on that? Like they own like 70% of the supply or something like that. So I don't know, guys. Like it's interesting, but I don't think that they are like they have some sort of proprietary solution that no one else can catch up to. It's they've got a head start, sure, but I don't know. It's done well, obviously. It's one of those hype beast coins, but I don't know, man. If like 4chan can't sustain a coin forever. I'll just say that.
So, what do you think of the future of Nash?
Eh, I'll say what I said about exchanges in that they're pretty much the best performing, subset of this asset class. Nash, I think, is probably one of the most interesting ones. But is there demand right now? Are people trading altcoins all over the place, or are we kind of still in a low volume environment? Um, I don't know. It's if we can see some more energy come into the space, which I'm very much hoping is the case in 2020, then yeah, exchanges like Nash are going to be well positioned for that. And certainly the way that they've built it up, I think, is one of the best examples in the space of how you do it right. So yeah, I don't know. We'll see. We'll see. But I feeling good on that one. Again, like same thing I feel about Link. I feel good. I don't feel great, if that makes sense.
Yeah, so we've been talking in the chat room a little bit about Darabet. So Darabet is I think they're Dutch company, and they're going to come down hard on people that are not supposed to be using their platform, according to them. Right. So they have this very, very soft KYC right now, which is if you say that you're from the US, or while you're registering, if you have a US IP address, they will boot you out and say you can't play. But if you register through a non US IP, I don't know how you would do that, right? Wink, wink. Um, then it doesn't matter how you log in. If you log in after that, they don't care what IP address you log in from. So right now they've got a very, very soft KYC, and they are threatening to really tighten down. They will do full KYC starting probably in the month of January. So I'm already starting to make preparations to. Right now, my only option to trade options going forward on crypto will be through LedgerX, which is starting to up its game. So LedgerX is a US exchange slash broker. And so they're in huge competition right now. What they're probably desperately trying to do is to get bought by one of the big dogs out there, like a TD Ameritrade or Fidelity or who knows, or Schwab or something like that. I don't know what their game is, but fairly illiquid, difficult to trade, not the same feature set as Darabet, so you're taking a step back. But what they're talking about is actually allowing you to trade options that are tied to um, zero point zero 0.01 Bitcoin, so 1/100th of a Bitcoin. So allows people with much smaller accounts to be able to trade on them without having the massive leverage, which is exactly the opposite problem. Like Chicago Mercantile is supposed to be coming out with their own set of options at the beginning of the year, but they're going to be based on 5 BTC, which is going to have the same notional value of like the S&P 500, which is going to be big. So big account problem. So all of this is starting to grow up. It's doing it very, very slowly. So very slowly, but we're getting there. We are getting there.
Yeah, Ricky Thompson made a very good point. This is basically penny stocks until it starts to grow up, and it will. I highly recommend Chris Berninsky's book on crypto assets, specifically how it talks about the difference between speculation value and utility value. Uh, Mind you, utility value does not be it's not derived from having a utility token, and I think that's one of the major changes we've seen over the past 2 years, and that's what we're going to see over the next 4 to 10, going forward. Basically, is that the utility token, as far as I'm concerned, is been relegated to what it should be, what it should have always been: usage as utility, usage as an arcade token, basically. And as I warned about, IEOs have been a joke, and just a bad, uh, it's just ICO part dose. I think 90% of IEOs are trading at below half of their value, or their listing value at this point. So clearly that was not it. I think what's going to derive where we're going to see value going forward, and where we're going to see potential for returns in this space, where we're going to see some, explosive power, is in subsets, subgenres of blockchain, and where we can see, like what happens when, like let's look at the AI blockchain projects. What happens when you blend those technologies together? That's interesting. And like I think in macro sense, the crypto market's going to trend upwards, but where we're going to see breakouts is in those sort of sub industries, those pieces of the industry that are dealing with specific problems and doing it in the right way. That's where we're going to see some interesting potential. But again, things have changed a lot, and so be respective of that. We're not going to see a 2017 ICO just mania, because that fundraising model inherently was, last holder loses. It's a musical chairs of sorts. Selling to a bigger fool kind of principle. It was a bubble. But I think it proved the need for, this sort of space, in terms of like, there was still a lot of good technology being built, and there's still lots of good energy here. And I think now that we've sort of cleaned things up, starts to make things interesting. So, anyways, yeah, cool. All right, I think we're getting to the end.
We are just about there. Okay, so
Yeah.
thanks everybody for wow, we got a whole hour in today. So thanks
Yeah.
everybody for hanging out with us. We will we're doing this next
Tuesday.
Tuesday. Okay, so
Yeah.
Tuesday next week. So otherwise same bet channel. All right. Thanks everybody. You guys have a great night and have a terrific weekend coming up.
Take care, guys.
Y'all take care.